All right, we are live. Hey, everybody, welcome back to our Thursday night broadcast. Had a fun summer, just kind of playing around on the lake and doing different things. So, but this time, I guess to get back to work and come back to our Thursday night live. So, today I've got Angelia Dale with I almost said Gateway Mortgage. I did say Gateway Mortgage. That's right. What's the other one? I almost said the other one.
We don't want that one.
Whoever she's with. She's back with us. So, Angela, thanks for joining us again. Why don't you reintroduce yourself so everybody remembers who you are, and we'll get this party started.
Yeah, so I'm Angela, and I am with Gateway Mortgage here in Rapid City. We have an office in Sturgis and Spearfish also, so we kind of have a brick and mortar in the local market.
Very good. Okay, so today we're going to. And my title was "What the fuck about the." What's going on in this neighborhood? What's going on in this market? So here we go. And obviously the interest rates have caused a big issue. There's been lots of media about everything falling apart and this happening, that happening. So tell us where things are at right now, interest rate wise, maybe comparison to 3 months ago, 1 week ago, how things are going.
Well, they definitely have started to shift in August and slightly started raising up. We had last week, we kind of have our worst week in a sense where the market was changed. We probably had a couple price changes a day on that. Friday, we saw a little bit better rates. And then Monday obviously was a holiday. And then Tuesday going in, we kind of had worse rates. And then yesterday and today, we saw a little bit better rates until about this afternoon. And then we got a little bit more volatile with the stock markets and things like that. So that illiquidity is what's kind of causing that volatility right now in the market. So definitely they're on the rise. They think maybe when the Feds meet on the 21st, we'll try to stabilize a little bit, but does that mean that we're going to continue to rise until the 21st and then stabilize from there? So just depending on inflation, if that kind of raises its head again.
Right. So where are they at kind of right now in general?
Right now, you're probably in the low sixes if you're in a primary residence. If you're getting into that investment property, second homes, you're in the higher 6s, 7s right there on that side. So,
yeah, and it seemed like even like the end of 2021, and we were still close to 3, 4, right? So it's actually taken quite a jump.
Yeah. I would say March of this year is when we really started seeing the pricing starting to go worse on that side. And it's been kind of a roller coaster. We kind of stayed stagnant for a little while, and then we would have worse pricing, like said, a couple times a change a day. So our pricing comes out at like 7, 8 o'clock in the morning. And then throughout the market, we'll watch. And if prices get worse, we'll get an update on rates. If the prices get a little bit better, we'll get an update that the pricing has been better. So you want to definitely stay on top of those rates and watch kind of what the bond market is doing.
Almost kind of a daily, hourly thing. Is that
hourly, kind of? Yeah, we have kind of an alert that if I know I'm waiting for a certain rate for a borrower, we'll put that alert in. And if they get it, if it clicks on there, then we're in there and locking. But yeah, anytime something changes, we'll go in and kind of price out that loan.
Right. Okay. Sounds good. I mean, kind of good. Do they I don't know. I know that nobody really knows, but is there an expectation of, we're not going to get above X, or we don't really know what's going to happen? Or is there kind of an expectation of when they expect things to kind of slow down or anything like that?
Well, what I've read through some of the commentary that we watch from rate watch websites and stuff like that, they definitely say that, if the inflation continues, we're going to see those rise up there. Like I said, they're hoping from a little bit more stability after September 21st with that. So, but right now it looks like they're just going to continue to rise slowly. So, okay. But yeah, unfortunately, no projections.
I know, do you in the mortgage industry, I noticed that, in real estate world, election years can to be kind of sometimes a little slower during about this time, with people everybody's kind of waiting to see what happens after election. Do you have to see that at all in the same sense as far as rates are concerned and applications, or?
We used to, and that's what's just kind of weird with the COVID coming in, because, before we would kind of be able to predict, yes, okay, if there was an announcement from the Feds, or if there's something negative that happened in the world, then we would see rates fluctuate from there. They'd kind of rise, but then within about a week, they would kind of slow down, going, okay, we're a little bit better. But since COVID, it doesn't seem to play that pattern anymore. It's not what we used to see. So, but yeah, traditionally it used to slow down a little bit, but with the elections.
Yeah, cool. Yeah, I've noticed a lot of people are just kind of hanging on. Let's see what happens here coming up. But
Oh, yeah.
of course, that didn't seem to make a difference back in 2020. But then 2020 to the middle of 2021, that's a whole nother. Let's put that into another world because that's a whole nother ball game. So
well, and they did kind of 2020 that they make the projections that we were supposed to be in the middle fives by that time, but then Trump, at Christmas closed down the government, and that kept us in those low threes. So they really thought we were going to be in those mid fives, 2 years ago.
We never got there. Yeah, I kept hearing more higher interest rates, and it kind of never happened.
Yep.
So now I guess here we are, right?
Correct.
Yeah, but I suppose I've seen the charts that even though we can say, oh, it's so high, but so I have 3% is pretty low and 6% is a little more average across the board. Is that kind of right? Oh, you locked up on me. Hello? There you are.
Okay.
Did you hear me?
Yep. I didn't. I lost you right about when they were so high.
Yeah. So usually, do they the 6% seems to me like there's a little higher right now, but historically speaking, I assume it's kind of not too bad. Is that
no? They're not too bad. You have to look at 2008. When they were in double digits or close to double digits. So we're not doing bad. I mean, honestly, a lot of the market, we had such low rates for that 5 years in a sense, and it's like now we're kind of adjusting. We stayed so low for such a long time. That 6% is really not that terrible of a rate, but when we were in the low threes, it really looks like it is.
Yeah. Right. So what are you seeing when things get volatile and people are coming up and applying? What advice do you have for people in this market when they're applying for the loans to make sure that they stay on top of things and what they can expect?
Well, we have a really good program here where it's called a lock and shop. So we can actually lock in a borrower at 60 days without a property. So normally you have to have a property to lock in a rate, but we have what's called a lock and shop. So we can lock out somebody 60 days. And if they happen to find a house within that 60-day period and the rates are worse, they're going to stay at that rate that we locked them at. If rates are better, then we can actually unlock that or decline that lock and then lock back at that lower interest rate or that better interest rate. So that's a huge, a huge benefit because of the fact that we don't know where the market is at. And we went from 30 days to 60 days because it's taking longer to find those homes. Yeah. So that's a good option there. The other one that we also offer are like a new build. We're allowed to lock out. We can actually lock out 360 days. So if you can lock out that, which is nice because say you lock out 360 days, which is like September 8th right now, then you can, if the rate is better within 60 days of like getting your construction done or something like that, then you can float back down. So locking in now, getting pre-qualified and trying to do that lock if you don't have a property is the best way to go, honestly.
And it's not going to hurt you because it's not like it's not locked this way. It's just locked this way.
Yeah. And it's a little bit higher slightly than say a normal lock if you had a property because of the fact that we don't know what's going to happen in the next 60 days. But it's nice because if rates do go up, you're locked at that interest rate. And then if they do go down, then you can unlock and then lock that day that you find a property. So it's kind of a safe, a safety net in a sense. So I would definitely say that because of the fact that, you could go in and if you take 60 days to find a house and then say the interest rates, like last month, the interest rates were 5.75 and now they're still 6.375. There's a difference in that payment wise. And so some people are, they want to have that fixed mortgage payment and it can fluctuate, $100 to $300 depending on that interest rate.
Yeah.
Well,
okay. Yeah. Hey, if you guys are just joining us, welcome with Angelia Dale of Gateway Mortgage. We're talking about interest rates and the market. Go ahead and leave us a comment below if you have any questions. We'll have time to answer questions afterwards, or maybe during the whole presentation. And let us know where you're from and how you've heard of us. So, next question for you, my lady Dale. is okay. So talking still about the volatility. If you are a borrower and you're kind of on that cusp of affordability, any best practices for those people when they're like looking at it and like an extra half percentage point is going to kind of put them over?
Well, yeah, I mean, I would probably, depending on where you're buying, property taxes and house insurance and things like that. But it is hard because that price range of $250,000 to a $300,000 home, can decide what you want to go for or where you want to be at on the house prices. So it does make a difference that way. So I would definitely say, lock as soon as you can, even if it's without a property right away.
Right. And your recommendation probably would be, if you're getting close to that point, probability to offer or look a little bit less purchase price wise and not be on that line, so we don't have any problems with that.
Yeah, because like I said, if you're not locked and you have that house out there, and if you had to get to 325, but your comfort zone is only 300, then you're going to have to kind of relook at what you're looking at for properties that way.
Right. So what are you seeing? So like in the past this summer, have you seen mortgage applications slow down specifically? Have you seen a bunch of less business kind of going on, or what have you seen?
It slowed down a little bit. In regards, we've had lulls. So there's a week or two, and then people are like, okay, now we're starting to find houses, a couple more houses, get some more applications. I think they're getting a little bit more comfortable with, okay, rates aren't, terrible in a sense, and they still have to
kind of figure out what's going on and get comfortable with that, and then we're back to business kind of a day.
Yeah. Because there was times, January is a little bit slower and that's normally our slow months, but the last 2 years, January has just been crazy busy. Yeah. So January was a little bit slower, and then a week here in July or something like that, especially right after the rally. But no, I mean, they're still coming in. It's just trying to find, especially in our area, trying to find that house that's in that price range that they need.
Okay. If I can. There it is. So, the June single family market.
Oh, and I don't know. I keep losing you, Tristan.
Yep. For a second. I'm just talking about the market where we're right now. It looks like it's my kind of slow over here for some dumb reason. That's interesting. Never had a problem with that before. But we'll hopefully we can get through this. Okay, so what's interesting to me, what I kind of like to watch is price and from month to month to kind of get a feel of where prices are going. And so you can see here, our days of market are about the same. From last year to this year, prices have gone up significantly, as we know. But then let's go to the next, and then go in. So this is 371 into July. That went down to 370s. Oh, look, the prices are going down. Prices are going down. But then we go here to the next month, and now we're back up to 375. So this kind of goes back to me looking like, hey, we're kind of back to our traditional 2019 world where we've got the slower winter, we have a busy spring, and then we have this little summer slump. So everybody's out going, enjoying life and being outside. And so, right now my email box has been flooded with price reductions and, hey, this is new listing, that new listing, kind of like it was in 2019. So it's kind of been kind of funny. But we're not seeing prices go down any at this point. So it'll be interesting to see how things kind of go on the next couple months. Yeah. But right now we're seeing everything just kind of screwing right along. We are seeing a lot. So of course, it's a lot easier to buy a house right now. Less competition. Where's my next place I was going to show you here is you can see here's the things that have happened in the past couple of days. So first thing you notice here on all these active listings, these red markers are things that prices have gone down. So you see prices getting a lot of price going down. And then I like to scroll down here to the under contracts, all these through here, and we're going to highlight all those. Look, even some withdrawals. I haven't seen those in 2 years. So in the past couple of days, the homes that have gone under contract. Look, we have single digits. Here's 10, 14. Here's 17, and so 12 of them, 12 out of the 19 have been under 15 or under 20 days, and the rest of them have been over.
Perfect.
So we're still seeing a very healthy, a very strong market that moves moving right along. And you probably would have needed to be on top of these homes up here if you wanted to buy them, right?
Yeah.
So it's not that it's been we're not seeing a huge slowdown that other places have seen, but it is. I can feel that it is definitely slower than it was in the spring. It's not quite as nuts, which is not a bad thing for sure.
Yeah, and that's kind of what we're hearing with clients too, is like, before, like you were talking about in the spring, we were having multiple offers. So I had borrowers on their 10th house, and they're like, I'm never going to get a house. And now they're not competing as much. Are you seeing more seller paid closing costs coming back too?
I've heard of those things.
Yeah.
I don't know what those are. I mean, what's the counter offer? I don't know. I mean, yeah. So it's kind of going back to the way things used to be, and that's the term I like to be using now is normalize. Go back to where things the way they were back in 2019. Things were still selling. Things are still selling fast, but we're not having every deal is a multiple offer with X money over asking price. That's what we're seeing right now. We'll see if that continues, or maybe things will pop back alive here in September, and who knows. So we'll have to watch that, of course, to see what happens. But
if I can jump back to kind of a question you had in regards to how else we can do. We are bringing in a little bit more of the ARM programs we used to have, and those are getting a little bit, I guess, more used because of the fact that they're like a 5-year ARM, 5-6 ARM. And so, it's a lower interest rate, but it's, you still have that concern of what are we going to be at, but it does definitely help that payment wise initially. So we're doing some more ARMs than we.
Yeah, that was going to be actually my next question. So you perfectly. It's just kind of what else is, I know that, ARMs, 5 years ago were kind of the scary word, the wrong word. And so now they're kind of coming back, and what other programs have been kind of coming back as interest rates are rising, as people are trying to get and more, they're trying to come up with more programs to help buyers get into houses.
Yeah, well, and like we have a couple local programs. We have NeighborWorks, which is a nonprofit out of Deadwood, and they came up, I think, I want to say it was in April or May. They came up with a GAP program.
Don't. I need a waiting music or something. Sorry about this, guys. I'm not sure why we have such issues today here. There you are.
There we go. Okay. So NeighborWorks
dance while we're waiting. So.
I know, it's like, I hope nobody can see what I'm doing. But yeah, they had a NeighborWorks GAP program, and that was up to $30,000. But unfortunately, they really ran through that one quickly. But we do have, South Dakota Housing, which actually came out with their rates 2 days ago. They've decreased their rates a little bit. Before they were a little bit higher, so not as competitive, and we weren't using those down payment assistance as much. But they decreased their rates, like I want to say Tuesday. So those are getting a little bit more where we can help with down payment closing costs with that program. And then we have South Dakota Grow, which is another local down payment program within South Dakota. So those programs are out there trying to help people get into the houses, since we weren't seeing seller paid closing costs before and that kind of thing.
Right. Yeah. If you didn't have cash, at least it was a little cash to put on top of your offer, it was tough to get into something at all.
Yeah,
so
exactly.
It's actually good to see that kind of normalizing a little bit. Even on the seller side, I know they like to see a lot of offers, but that was stressful, presenting 20 offers to them and say, which one do you want? Well, which one do I pick? I don't know. Too many choices. But okay, awesome. What kind of questions have you been? What are your most common questions that you've been getting over the past couple months to the year?
Well, pretty much is where the cash is going to come from. We have a lot of people who need that down payment assistance for especially first-time home buyers. I have a lot that are still out there thinking that you have to have 20% down, which is not the case.
Right.
Like I said, we've talked about this on your show before. You have rural development depending on what area we're in. We have conventional that's a minimum of 3% if you can get into that program. Up 5% normally, and then you have your VA and your FHA. FHA is 3.5. So a lot of those are, I didn't realize I didn't have to have 20% down. So kind of filtering that out, and then like I said, where their money is going to come for their down payment and closing cost assistance is the biggest one. And then what can you afford? You don't want to be house poor, so you might get somebody approved for a $400,000 house, but they really only want a payment based on a $300,000 house. And unfortunately, there's still those ones out there that think we can get an $800 payment. It's just
That's just not
realistic anymore.
not happen. Especially getting, if that $800 payment includes needing some kind of FHA or something, and the homes that are anything were close to that are always are kind of beat up and not in any shape for a FHA type loan.
Oh yeah, well yeah, and I mean we do have the FHA, the rehab programs on that side, but unfortunately we can't use the down payment program assistance with those programs because of the fact that when you do a rehab loan, there's a conventional loan that does a rehab, and then the FHA, you give up to about 180 days. Well, South Dakota Housing, we have to turn in our loans within a 90-day period of closing them. So we can't close those with South Dakota Housing. So it is difficult. And there are those homes that are under that, 2-3.
Seems to be cycling. This is kind of cool. So we're gonna every once in a while, it's like almost the perfect timing. So obviously we're talking about the common questions, not only on Angela's side, but also on my side. And typically the questions that I'm getting are pretty much things we've been talking about this throughout this time. Hi, Angela, welcome back. Well, I'm just going on the common questions on my end. And most of those common questions are more along, hey, what about the money thing? But also more along the lines of, hey, how active is the market? Is this still crazy? Is it all going to die? Are we all is the market going to fall apart? Which is kind of what we answered earlier in the broadcast here. So those are most of the common questions that I'm getting is just, hey, where are things at? What do I need to do? How can I be prepared to buy a home here in Rapid City these past few days? So
yeah. And ours, I mean, obviously the biggest one is rates and where are they going to be? And I really wish I had a crystal ball because
we all,
yeah, I'd be set. But yeah, that's, the rates are where are they going to be at? Do you think they're going to come down at all? And really, I don't think we're definitely, I don't think going to get into those 3s and 4s anytime soon.
Yeah. If you guys have any questions, go ahead and put them in the comments below, and Angela will answer them for you. Kind of last question for you is, you were talking about things. How do gift letters work, or gifts from parents or others?
Well, so there are a couple different programs that allow you to have gifts where if you need, say you need $10,000 for a down payment, that parent, parent, relative, partner can provide that gift to you. And then we have to source that it doesn't have to be paid back. So there's a gift letter that we have people fill out that says it's a gift and it doesn't have to be repaid. The easiest way to go is to have that gift either wired or brought at closing. So then we don't have to go in and document that the donor who is giving that gift has those funds available. If that gift is already given to somebody and that borrower has put that into their checking account, then we actually have to ask that donor, which is a really kind of a hard push of like, can I please have your bank statements to show that you had that money? So we always tell people, if you're doing a gift, first off, it has to come from a source that we're able to use, and then don't bring it until we go to closing. So that's the biggest part with gifts. But you can use them. It's nice.
Chris, how you doing, my friend?
Hello, Chris.
He's probably watching us on a big screen TV. You're on 60 inches right now, Angela. How does that make you feel?
Oh, okay. Look at the bags.
I live out of state and I'm looking to relocate to Sioux Falls. Will I be able to get approved for a home loan using my current employed information?
Well, if you work remotely. So you have a couple options. So if you're moving and you're able to work remotely, we just have to get a letter from HR that says you are able to work remotely. If you are moving and changing jobs, we can get an employment offer letter and get you pre-qualified based on that employment offer letter.
And clarify this, if I'm not correct, if you are changing jobs in a similar field, you probably don't need quite as much information as if you're going from a construction worker to a nurse.
Well, exactly. And it depends on which loan programs. Like if you're in an FHA loan and say you're, like I said, changing from a construction to a nurse, then we have to actually document that you had training to change your different fields on that side. So it is easier if you can work remotely or if you're staying kind of in that same field, that same industry. But yes, I had somebody who went from, I think he was a UPS driver to IT. He was able to provide certification that he took classes to become an IT person, and then we were able to use that income.
Oh, okay.
on that side. So
provide the proof of what you're doing, and then that,
yeah, pretty much everything we do is, we need proof of everything. Source that, money, we need to source that you can work and still in South Dakota. Now, we do get people who are, say, self-employed. That gets a little bit trickier because of the fact that, so say I have a massage therapist coming from Arizona and she comes to South Dakota. Obviously, she has to build up her clientele.
Right.
And that we can't use that income because it takes a little while. But if she also sells like Young Living oils on a website, I can use that income because it's a web-based program and she can sell that. So you have to really break it down for each individual.
Right. So call Angela.
Yes.
Yeah. And you're available.
Answers. Yeah.
You'd be available in all about South Dakota, so you could help him, RJ, in Sioux Falls if you wanted. I see.
Oh yeah, yep, yeah. We actually pretty close to nationwide, other than Alaska, Montana, and California, I think.
Yeah. We had to deal with that marker guy. Damn.
He was so easy.
Thanks for asking the question, RJ. We were certainly glad we could help you out with that. And always thank you for asking the questions. You never know unless you ask. And in regards to the other thing I was going to talk about, I thought we should talk about, which is one thing that we don't probably doesn't get mentioned enough, is cash. I can't just bring my cash under my mattress because you don't have it sourced, which
Correct.
is a little sad because, hey, you're supposed to collect money, right? But so how do you, I mean, if I take that cash and put it into a bank account and then a month later pull it out, does that work? Or no? As we're talking about cash, it freezes. That's just the way it is. So I tried to. There she is. There you go.
Okay.
I was going to say, we're talking about cash and then you freeze. I don't know.
I'm out of here. No, really, it is. Again, they want things sourced, and the reason is, they want to make sure you're not a terrorist. You're not laundering money. So they want to be able to source that. They also want to make sure that you didn't go get a loan for that money and put in your mattress. So when you have cash, say you have $30,000 underneath in the shoebox, I guess. I tell people, go put that in, especially if you're starting to look, go put that in your bank account now, because then what will happen, it will season while you're looking for a home on that side. Now, granted, if you have cash because you sold a boat or you sold a car, I need a bill of sale and then show that you had ownership of that car, either by title or insurance. Then I don't have to worry about the cash because we have a source for that. I had a case about a year ago where they were buying a fairly big price house and they had almost $200,000 in cash and we couldn't use it because we could not source it. So, and the way that they look at it is, if you have a checking account, which, some people don't want to put all their money in the bank, but they have a checking account. They're like, well, this isn't normal to have that cash in their home. So if there's a way to source that cash, then we can use it. But if not, I would say go in and put it into the bank, let it season. And usually that's anywhere between about that 60-day period to season. So it goes through the cycle of your bank statements. And then we won't have to question it.
There we go, ladies and gentlemen. We're talking about seasoning cash as well as steaks.
Yeah, we don't like mattress money, unfortunately, anymore.
Yeah, remember when I first started real estate, we talked about even the earnest money. They really didn't want that cash, but if you're supposed to make copies of that, so you fan the money so you'd have leastwise a copy of it to show that it wasn't, counterfeited. But even that.
We've had that too, and we have to go in, and when you have that money, I have to go show that you pull that money out of your ATM or your account, that you actually had that, because again, they don't want to have somebody say, I got $1,000 from my friend, and now I have to pay them back, because then it becomes a liability that you have to pay back somebody.
Yeah. No, something that people probably don't often think about is that little sourcing issue, but yeah.
Yep. Yeah. Sell something, keep your bill of sale. If you don't have to have, write up just a generic bill of sale and then take a picture of your insurance or your title. If you sell something like that. I just had somebody sell a Pokemon card, and so we had to source that.
Of course, I know that's something that we all have that we have to sell. So
it was $140. So yeah, there's always stuff, but we usually have a way to work around it. As long as I know about it, we can try to figure it out.
Okay, perfect. Sounds good. Any other things come to your mind right now? I think we answered a lot of questions and kind of got things out there in the open. So, oh, she's frozen again. So it's a good time to quit. All right, everybody. Thanks so much for watching. Have a great September, and we'll see you next time. I got a few good guests lined up. We're going to talk about South Dakota versus Iowa. I've got a home inspector lined up and a home insurance. We'll talk about South Dakota home insurance here in the next month or so. So
there we go.
There she's back. Long and soon enough for me to say bye.
Goodbye.
See you guys.
See you, Chris, if you're still on.